Hello and welcome to this iGrow broadcast. My name is Burton Pflueger. I'm an extension economist with SDSU Extension Service, and today I'll be talking about the South Dakota agricultural land market and trends in the cash rents that we've seen. I'd like to start first with a discussion of cropland and how our cropland values have changed over time. I'm going to show you next a map of South Dakota with the different regions identified and different land valuation values for those regions. When we look at the map, the top number in the map is going to be the number that the survey respondents gave us for land valuations in 2012. Underneath that will be the number for land valuation in 2011, again from our SDSU real estate market survey. And the bottom number in each set of three numbers will be the percent change that we saw from 2011 to 2012. In this first map, the values all represent the average of valuation for all agricultural land for that region. All agricultural land, as is reported in this map, is the weighted average of cropland, hayland, and pasture land for the different regions. One of the things to note on this map is the significant changes that we've seen from 2011 to 2012, especially in the central region where we saw a 55% increase in valuations over that time frame. Statewide average for all agricultural land from 2011 to 2012, the increase was 26.8 or almost 27%. Let's put that in perspective by looking at the historical trend as we have seen over the last 5-6 years of survey results. I started with 2007. That's really the first year that we saw a significant increase in commodity prices, and you can see that that has an influence for valuations that we saw in 2008. Most of those values strong 20 to almost 25% in a lot of the years for all agricultural land value for South Dakota. Next, let's look just specifically at cropland, and this would be non-irrigated cropland. And you can see that the percent increase is a little bit different than we saw in the agricultural all ag land, but yet showing very strong changes over the last few years. Valuations across the state, you'll see that our highest value land is in the southeast region, almost $5,000 an acre there. East Central region, not too far behind the southeast region. And we have a changing pattern across the state with our highest values in the southeast region, the lowest values in the northwest region, following some of the soil productivity and weather-related conditions for the growing conditions that we have across the state. Next, let's look at hayland. As far as hayland goes, we have the same kind of numeric representation for the different regions and the value of hayland across the state. Again, these are 2012 numbers as were given to us as a result of our survey. Again, the highest values in the southeast region, the lower values in the northwest region, and flowing across the state by the different productivity regions of the state as we see them. Hayland values, again, when we look at that over a historic time frame, some significant increases, 2008 and 2012, both being very strong, above 20%. 2011 being 15%, and in 2009 and 10, both showing significant increases in valuation change for those years. The next category of land that we'll look at, pasture land and rangeland. For pasture land and rangeland, we see the same kind of pattern with our highest values in the southeast region, lower values in the northwest region. The difference between range and pasture is rangeland is generally going to be native pasture ground then being more of the improved pasture where it's had perhaps some additional seeding, maybe some additional fertilization, but something to make that a better pasture than the native grassland would be. As far as our changes from year to year for pasture land, rangeland, we'll start first with the rangeland. Again, we see 13 with the change from 2011 to 2012 being 20%. Again, 2010 being the year that we saw the lowest change. And as far as our pasture land, 2010 being somewhat significant, and it's the only negative change that we've seen in any category of land since 2007. Again, our pasture land changes from year to year being very, very strong. Land valuation is related to cash rents, so let's look at cash rent values next. As far as our cash rents go, these are going to be values that are reported to us as dollars per acre for the different categories of land that we look at in our survey. So for our cash rent values across the state, as was reported in the 2012 survey, again you can see that for all classes of land, the highest cash rental rates occur in the southeast, cropland being stronger in the east central, but as a general pattern, we're going to see the higher cash rents in the southeast, the lower cash rents in the northwest, and in this case the rangeland represents rangeland and pasture together. So we've got the same kind of pattern with cash rents that we saw in valuations, but let's look at the changes from year to year of the different categories. Cash rent changes in cropland, showing again significant increases over time, with the one exception being 2010, a little bit lower increase, but still a positive increase that year. And if you would remember back, less than what we saw for valuation changes of the same time frame for the same classification of land. Hayland, 14 to 15%, again 2009 and 2010 being the lower value changes on a year-to-year basis. And then for pasture land, significant again that 2010 for pasture land showed a drop of 6% for the cash rental rate. If you remember, we were about even, slightly lower with the valuation there. All of that fits together, but let's see if we can take some time to explain what might be some of the factors in the ag land real estate market for South Dakota. Market factors is a question that we include in our survey, ask our respondents to give us their indication as to what reasons for buying and selling are, as well as positive and negative factors in the land market for that year that they're responding to. As far as the 2012 results for the ag land survey, reasons for buying as were reported, expansion of operations. We did see a response of investments being a critical component contributing to reasons why individuals would be buying land, and then to take advantage of higher commodity prices. On the other side, the reasons for selling, the high price, somewhat significant, only recently came into the list of reasons for selling. Retirements and estate settlements have always been there as far as market factors to explain why people would be selling farm ground when we're seeing that kind of appreciation and that kind of earnings. Many times they either are retiring and leaving the state or needing to settle an estate, and that land then becomes available for sale on the market. Positive and negative market factors. Positive factors, naturally we would see high commodity prices, low interest rates, both leading toward increased profits in agriculture. On the negative side, the input costs would be a factor that some people were looking at. As input costs decrease, ag profits could be going down, could influence the negative side of the ag land markets. The general economy, maybe dampening some investors' enthusiasm. And at least in 2012, we did get some responses that indicate there were no negative factors in the land market in South Dakota for 2012. While we have all of the data for 2012 as we've reported here, let's take some time and look at perhaps a little longer perspective on the ag land market for South Dakota. Over the last 4 years, we've seen general U.S. economic recession and a slow recovery from that session. And yet, despite that, we saw statewide increases on average for ag land values going up almost 14%. Maybe to some part explained by the farm commodity price boom. And we still saw, as we illustrated in one of those early maps, sharp regional differences as far as the percentage change on year to year. We know that farmers have a reliance on federal policies, so perhaps we should look at what federal policy influence has been on the ag land market in South Dakota. For this, we've taken from the start of our survey in 1991 and broke it into 4 different time frames to try and explain what the influence of federal policy on ag land markets has been. The first period, 1991 to 96, we had the impacts of the 1990 Farm Bill. We were still, to some operations, recovering from the farm financial crisis of the 80s, and our interest rates for borrowing to purchase farmland running 8 to 10%. Our next period, 1996 to 2001, we had the impacts of the next farm bill, the 96 Farm Bill. We had some increases in federal program spending, no real changes in farm mortgage rates, and so we saw a little different pattern in the ag land market and some of the key factors for that period, 1996 to 2001. Our next period, 2001 to 2008, we saw sharp drops in farm mortgage rates. We continued to have the farm program and planting flexibility support from our federal programs. Crop insurance programs changed and we saw an increased use of crop revenue insurance. Still maintained relatively low rates of inflation, making the inflation in ag land values attractive, and commodity prices continued to go up, especially starting from 2007 and forward. The last period we looked at then was from 2008 to 2012, recognizing that we had the major economic recession for the country, but that economic recession did not impact the ag sector to the same extent that it impacted other sectors of the economy. Commodity prices were still strong, interest rates were still low, and we saw that all translate into a strong ag land market as we went forward. A couple of key observations. Cash rents, as it would influence the return to agricultural land from an investment standpoint. So our cash rates of return, relatively stable 1991 to 2000, and then from 2001 to 2012, we saw that cash rate of return declining over that time frame. Essentially what that meant was that land values during that time frame were increasing much faster than our cash rental rates were, and so we can draw the conclusion that the reduced interest rates that were present for the purchase of farmland influenced farmland values, made it an attractive purchase, and we didn't see the corresponding increase in cash rents as we went along. As far as our cash rates of return, currently they're very low, 3 to 4%. When we look back at that earlier period, probably were 7 to 8%. During that 2001 to 2012 period, we did have speculative market conditions, and we did have capital appreciation being a strong factor in addition to, or for some investors perhaps instead of, the current cash rates of return that were there. A little bit more on cash rates of return. National economic recession, that second half of 2008 to 2009, slowed some of our increases in farmland values. We showed you that in the tables that we were presented, and likely altered some of the farmland market psychology that was there. Essentially, the market psychology then shifted to what could be earned on current income cash flow. However, now the increases in commodity prices have led to increases in both cash rental rates and land values, especially for cropland, and perhaps more significantly on cropland than our other classes of land that we've seen. So generally, when we look across the history of the ag land market survey, we see that the relationship between our regions has been relatively stable. The relationship between the different classes of agricultural land that we survey on has been reasonably stable. And generally all of that reflects the fundamental differences in soil productivity, the long-term weather conditions that we see across the state. As far as valuation observations, again, as I've said, cropland and hayland values have generally increased more rapidly than we've seen for rangeland and pasture, have always been reported to be much stronger than our rangeland and pasture land have been, maybe due to production technology changes, changing crop mixes, and a response to the growing ethanol production, the increase of ethanol plants that we've seen in the eastern side of South Dakota. As far as an outlook now on farmland values, wish we could be more definite on what the outlook is, but let's look at what some of the indicators are as we see. Bloomberg released a report showing that farmland returns in the fourth quarter of 2012 were the highest they've been in 6 years. While it's interesting to note that the returns went up 9.5%, I think it's also important to note that land appreciation accounted for about 5.25% of that, and the income from the higher price from the revenue side of agriculture accounted for about 4.3%. So both factors are working together to increase our land values over time. The next map I want to show you is the results of the Iowa Land Value Survey. Iowa does their survey in the fall of the year. Their results were released in November, and what their results show, if we looked at Iowa as a whole, again, some significant increases in land valuations coming into 2013, but I wanted to focus on that region that borders South Dakota. The region that borders South Dakota up almost 37% is what they're saying for land values going into 2013, and we should see some influence of that market as it affects the southeast market of South Dakota. Specifically for South Dakota, some of the preliminary results of our 2013 survey would indicate that we will see some increases in land values again this year. Now, this is very preliminary results, perhaps based on what we hope to be no more than a 20% response to our survey. We're still getting data in and encourage people to continue to submit those survey responses as time goes on. The top number in each of the regions here is the increase in crop value that was reported to us from our survey respondents from 2012 to 2013. So we're seeing that, let's say in the southeast region, cropland values went up 18%, and then what the survey respondents are forecasting for the change in 2013 into 2014, they expect that only to be about 9%. In each of the regions, we see that their expectations for 2013 to 2014 are much lower than what they're saying as far as current change in valuation will be for cropland. The same kind of situation applies for Hayland. Perhaps we're getting a little more consistency across the state, but now we're starting to see some single-digit increases being forecast for 2013 into 2014. Same kind of situation on pasture land, although we're seeing more single-digit increases in 2014 from more regions of the state. Central region, again, being very strong, continue to believe, the respondents believe that pasture land in the central region of South Dakota will probably still show some significant increases during 2013 to be reported on in 2014. What would be some of the factors that might explain why farmland values continue to increase? We know that farmland values and farm income are highly correlated. As farm income goes up, farmland values continue to increase as well. We also know that the investor market, the investor purchases out there can influence some of the market values. Investors taking advantage of the inflation, the appreciation in land values being stronger than it would be in alternative investments that they could make. So what are some of the key components to watch during 2013 as we go forward for farmland valuation? Of course, we've got weather issues that we need to be aware of. We did see some changes. If we can think back to that initial map that we showed, some of the strongest increases were in the northern, northeast part of South Dakota, where they weren't as affected by the drought of 2012 as some of the other regions of the state were. What the weather will be in 2013 is a factor to watch. How quickly will we recover from the dry conditions? How fast will that recovery influence, say, cropland versus pasture ground? Weather-related issues will be a factor to watch. We also should watch government policies. Hopefully this year we will get our new farm bill being released out of Congress, and we'll have to watch what the provisions of that farm bill will be and how they may influence our land markets. Amount of debt that's out there, interest rates, the whole financing picture is a factor that needs to be watched. We know, at least anecdotally, that a lot of people are making a more significant cash payment or a cash down payment on their land purchases than what they have in the past. And then, of course, we watch the general economy, how that translates both in the U.S. as well as world economies. World economies and the U.S. economy both influence our trade policies. Trade policies can influence some of our commodity prices. So those would be the key factors to watch as far as what we're looking at in 2013 influencing land market in South Dakota. Let's take a look then at what the cash rent outlook might be. Again, from preliminary results out of our 2013 survey, per acre cash rents for cropland, $50 forecast higher for 2013. This would be the factor that would influence perhaps our March market most as far as renegotiation of land rents. We're seeing again across South Dakota, all of those being positive, more positive on the eastern side of the state than we saw on the western side of the state. As far as Hayland, maybe a little more consistency here. We see a lot more $10 to $15 increases for 2013 than we saw. Still some strong increases on the eastern side of the state, with the strongest increase coming out of the southeast region. And then as far as pasture land, a lot more consistency. Generally across South Dakota, pasture land cash rent per acre rates should be going up somewhere $10 to $15, with the exception being that one region that only shows a $5 increase. But again, very preliminary results. We'll have to watch what the final report will be coming out of the survey results. Outlook on cash rents, we would have rents reflecting many, many different things. We know there are some multiple year lease arrangements out there. We're not sure how those multiple year arrangements may influence what the reported cash rent would be. We know that we have differences in land productivity which should influence land rent. So when we look at a generalized number for a region or for the state, we need to take into account that individual locations, individual parcels may rent for more or less of that, depending on what the productivity of that parcel might be. The other thing that we don't know but believe to be a factor in the market is the relationship between landlord and tenant. I know some landlords are willing to accept perhaps less cash rent for their crop ground, and if that were the case, perhaps there's some arrangement where the tenant then takes care of snow removal, maintains fences. Those kinds of issues may lead toward lower cash rent, but still preserves a landlord-tenant relationship that's there. We're also seeing some renewed or increased or continuing interest in flexible cash rent arrangements. A lot of times when we look at those, we find that there is some negotiation between landlord and tenant. Anybody that's interested in flex leases can contact SDSU Extension, and we'd be glad to work through some of the provisions and help you set a flex rental arrangement in place. Projections of rental rates in South Dakota can and do change based on the expectations of both tenants and landlords. We know that we will have weather conditions, landlord-tenant relationships, and as we move closer toward the date that those rental rates will be set, the expectations of both landlords and tenants will change, and the rental rates will reflect those expectations. Thank you for watching this. I hope you found it informative regarding the South Dakota ag land real estate market. As we go forward, we have additional information available for you on the iGrow website, and if there are any questions that you might have, we would be able to answer those. If you're interested in the 2013 results, please contact me, or again, consult the iGrow webpage for updated information regarding agricultural land in South Dakota.